I wouldn't call it hoity-toity, but it's starting to feel that way.
Well, we're getting there, John. You're going to have to start wearing shoes and dress pants instead of sweatpants.
I don't know if I'm going to. I like sandals, and I guess if I have to start wearing pants, that's fine.
Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tunkseth. He's John Prishman. Well, John, it's actually summery around here. I turned on the air conditioner June 24th.
Yep.
Has to be the latest I've turned on the air conditioner. There's a lot going on, though. The report last week, non-factor.
Yeah, I have no idea why they've been hyping up these in-between reports like there's some game-changing. It's weird. They keep on these ones on a scale of 1 to 10 are the ones that are I would consider a 1 on importance. They get more news and coverage than I've ever seen, and then they release the numbers and they're exactly what they thought, and nothing happens. It's happened like 10 times in a row now.
We are also seeing some significant weather, though. I mean, Eastern Corn Belt, dry and hot. Minnesota and Iowa flooding.
Yep.
Sioux Falls looks insane. I saw pictures of the falls there, and
yep.
Possible dam failures. Water everywhere here and nowhere in Illinois.
And this is why people struggle to make money in the summer. In every summer, what happens is it gets to be really personal. So if you're drought, you don't want to think it could go down. You want to think it's happening to everybody and it's going to go way higher. But it gets very personal, and you tend to focus on the news, and the news almost always will tell you the crop's doing bad, or this region's horrible, or that. And this is why people do poor marketing in the summer. If you look at the seasonals, you look at what we normally do, this market's doing what it normally does. And that's, maybe I shouldn't be controversial because it is. If anything, the seasonal started early, and the seasonals have been weak. Like, they haven't gone up when they're supposed to go up. They've gone mainly down with little flare-ups. So in my mind, that if you can't even go up when it's supposed to go up, that's even weaker, and it's gonna play into the grains later, which is later. So we couldn't rally in the winter, and and we're not able to rally much, but we did rally a little bit into the springtime. Still, these seasonals are no different than they normally are. You generally were topped out by June 18th, 19th, depending on the weekends. And it wasn't necessarily a high, but we started heading down very sharply at a time of year where we normally head down very sharply. Now, the argument is way too early before we know anything about this crop, and there's nothing out there. And you hear all these stories. And that's the problem with a lot of people's marketing, is they tune into these stories. These stories aren't going to help you make better decisions ever in the summer. It's all going to be price action, what the funds are doing, what the seasonal say it normally does. That's where you're going to get your better marketing. Listening to the news in the summer, it just causes more problems than anything else, because it just amplifies these problem areas. And what is it going to amount to? Very hard to quantify, and that's going to lead me to, that's why the USDA they're not going to say anything in June, because you couldn't possibly know the answer. And in rare defense of them, I say they're right in doing that. We don't know the answers. If they would looked at the crop conditions last year and jumped ahead of themselves and said, hey, we need to slash this yield down to nothing because it's hot and dry in May and June, they would have been way off by the end, because we ended up with a record yield in corn. And that's why you get this disconnect from what you see in the news and then what the USDA is saying. This happens every year. Like, this is no different than any other year. It's weaker than maybe you would think it was with, like you say, the news that we saw, but it's not uncommon what's going on.
Well, and reality is, by the time anyone writes an article about it, or anything you're going to see publicly, that's priced in the market. People are aware of it. That's happening. It's not like, I went on DTN and read an article about soybean yields, and that's the secret to the whole market. It's been priced in, and the article's been written about it.
Yeah, if you're reading mainstream news, it's not going to help you. It never has. It isn't something that's changed in commodities. It's always been that way. Where you're going to get your benefit to reading news is picking out the tidbits that actually recognizing what's important, what's going to be important. Like I saw, some articles on what soybean plantings are going to be projected next year, and it's very high. You want to start anticipating the real numbers and then acting on that maybe before it happens. But that's where good information comes in. We mentioned it. A lot of people's poor marketing is the information that they're getting. You need to improve your information if you want your marketing to improve. I mean, it's really that simple. There's a lot of bad information, a lot of bad advice out there. If you want to improve, you need to improve your information. And it's really that simple. And to me, it's not complicated. You look at USDA's numbers, you look at seasonals, and then you look at all the stories that we look at during the day and take out the pieces that are actually important that will factor in that hasn't happened yet and try to anticipate where the price is going. But people overcomplicate it. They read mainstream news. Newsletters are popular, all the stuff. And if you're asking yourself, why am I always on the wrong side of the market? I mean, it's because you're looking at poor information.
I think we've just briefly touched on it, but this actually kind of brings up the topic of spreads. Spreads and cash basis, and those things are things you can definitely use.
Yep.
To look at where
and that's what I'm talking about. That's where we would come in. Like, okay, so you're looking at spreads, and you're looking at, like, if the USDA's numbers are wrong, it's going to show up in spreads, it's going to show up in basis, it's going to show up in maybe even price action, but it's a slow process. Like in 2019 when we had all those PP acres and everyone knew that there wasn't a good corn crop and there wasn't the acres out there, it still took till 2020 for that to hit. But for 2 years previous, after 2019, or the basis was a lot better around the country for a full year and a half before it blew up. Like instead of negative 45 maybe for corn, it would be normally around here, it was negative 30, negative 25. And then the spreads were acting a lot firmer, but it still didn't take off. It wasn't the next day. These are just reading the tea leaves, like, hey, maybe this information is not matching up with what I'm seeing with the price action, spreads, and basis. But I feel like a lot of people don't even know what I'm talking about when I say basis and spreads. They confuse their local basis with like national basis, the spreads with like the bean spread is a good example where they're spinning the July-November bean spread into really bullish. When you actually look at it, it's as narrow as it's been in years. Is it positive July's over November? Absolutely, but it's kind of meaningless because they pushed the price down so far that July is trying to stay to a price that it can still get some of these old crop beans out, where the new crop wants to fall and it's pulling down July. So it's actually widening the bull spread out on the way down, which you don't see it too often. But unfortunately this time, it's just because beans are so bearish overall, the outlook, that the back end's pulling down the front end shouldn't be going down. So even when you know spreads, it's these these in-between things that you got to read too. So it is stronger than a really poor year, but still plus 40, plus 50, wherever it is not very high relative to the recent history when it's actually been very tight. What do we see? Plus $1.50 last year, $1.90. Like it's that's high, but that's what it's been for the last few years. So even when you kind of know the spreads, it's not like the answer. It's just another clue in what you should be looking at. Instead of listening to all the mainstream stuff, you should be looking for these little clues that might tip you off to where this is headed. And then, of course, what the funds do in the market's very important. One big clue to what was happening right now is they had covered all their shorts about a month ago, or most of them in corn and a lot of them in beans. So
really
net long. Yeah. But it wasn't too long after that before they established a very heavy short position again. So you'll find guys swimming against the USDA, swimming against the funds. You're going to have a hard time in the markets when you're always finding yourself arguing with the USDA numbers, arguing that the funds are wrong. You're just going to struggle in these markets, in any market, bull, bear, doesn't matter. When you ignore what moves the market, you're going to have a rough time.
I think that happens to a lot of people, though, or especially on the, like you were talking about, we're reading tea leaves. It's signs. It's not, basis was rising for a year and a half. Spreads were starting to go out. We're talking 2019-ish into 21. When you act on that immediately, so often I see people, especially myself, jump in too early because we see these signs.
Oh, I'm way too early all the time.
Things that are coming, and it all has to be part of formulating a plan.
Yep.
And then how you position that, whether you're reading the price action, whether you're looking at charts and you have certain things, or those things, like those things all factor into how you read those, right?
It does. This year, it looks. Last year was complicated because of the weather. It was awfully dry for an extended period of time. This year wasn't complicated at all. Like, yeah, there was some troubles getting in here and there, but overall it got in ahead of the 5-year pace. And then it fell at a time of year when it normally falls. It wasn't complicated, but when I talk to guys on the phone or I hear other people talking, or my neighbor says, it seems like this is really surprising to a lot of people, whether it's because we've been in a bull market for so long and they don't like these prices. It's hard to say, but this year didn't do anything it normally hasn't done in the past, seasonally speaking. Very common pattern that we're seeing. But maybe Twitter amplifies it, maybe the news, maybe I listen to too much of the news. Everyone seems shocked that this is happening, and I don't know why.
I'm curious more on the spread side a little bit. So what specifically do you look at? I mean, you mentioned the July-November bean spread, but just spreads in general, are there specific aspects that you look at? Is it there's specific correlations for each crop that you look at, or each cattle? Or what are you looking for when you look at spreads? Oh,
for cattle, some of my favorite spreads are bull spreads up front. So, or near the front, like let's say October, you need to know each individual set. Like October versus December is going to be different than December, February. And then February, April is going to be very different than April, June. You just have to know the personalities of each set of them. But I like the ones where oftentimes the funds skew stuff. For me personally, I like the funds in the market that they tend to skew stuff and create more opportunities, especially in the spreads. As long as you're not in early and get railroaded by them before. If you watch it happen, then it does create a lot of opportunities. So, like October, December, when negative $7.50 to $8 is a good zone where I like to get involved there, because historically it has a hard time getting wider than that. And then the simple logic between, like, if you're looking at why would you sell your cattle for $8 less if you can hedge off the board for $8 more in December, feed them for a few more weeks, and then you're hedged in $8 higher. So why wouldn't you just hold your cattle back and get more money? Is a simple thing. And that's what happens. It's like, well, they fixed that gap. It's too big a gap as October gets closer to the front. Then all of a sudden it's like, why is this $8 cheaper? And then it tends to fix itself. Live cattle is one of my favorite markets for that, but you have to know your spreads. Obviously, just through the years, you just get used to it. You don't know when they're going to pop up. The funds will come in there and smash the market and really skew them over a few days. Something that wasn't there 3 days ago might pop up. So I like it when they get really wide, but that's not where all the opportunities necessarily are. Then you look at beans. Typically, you want to bull spread into the springtime and it gets tight, which I did last year, and it was horrible experience. The beans didn't get tight. We were supposed to be out. Argentina was out of business and meal was going to explode. The meal spreads actually have gone, of course, well after I'm out. But the beans never did live up to the hype. It went to full carry and just sat there. Corn, the one I've liked recently is the May, June. That's one that's worked very well for the last few years. This year, even if you got in, I think it got to negative 13.5, which is exceedingly wide for that one, and narrowed up to negative 8.5. That's only 5 cents. But still, it tends to get tight for that reason domestically. So there's a lot of different ones I look at. Now, what am I looking at now? I'm looking at the inversions that still exist, like November 24 over 25 beans. I'm looking at July 25 corn versus December 25. So I'm always looking deferred. The front falls and then the back end falls later. So the opportunity, if you miss it in the front, oftentimes it lingers in the back. Am I making a move on any of these right now? No, I'm going to wait for the report and see what that says. But what'll happen is it falls this time of year, and you'll see guys like, oh, I missed it. I'm done. There's no more opportunity. And they really miss out on this middle part of these opportunities, and a lot of them are in the spreads. So even if the flat price doesn't go down a lot more, the market tends to put carry into the market, so you can make money in the back end if you know where to look. But you also got to be careful. This is where we still have a lot of summer weather ahead of us, and you don't want to get caught in these bear spreading in front of hot and dry, which is kind of the forecast that we got. So you got to be careful, and you got to know what you're doing. But I'm always looking. I'm looking at May-June hogs right now, which is a long ways away, but it's at a discount that interests me. I'm not entering it. I'm not recommending it. It's a spread that I tend to do every year in different time frames. So I'm already tracking that because it's a market that's just been beat up beyond beat up. So it's like, hey, what is stuff that normally works that isn't so high risk that maybe I can get involved in bull spread wise? There's not a lot to choose from this time of year in hogs. It's more of a bear spread time of year. But I'm looking at the deferred stuff. So when it gets to a real cheap price and it fits what I want to do, then I'll probably enter stuff like that. But I'm always looking deferred all the time, and I know what I'm looking at because I've done it for so many years. Just call me is my advice if you want to learn about it. And some of these spreads that I do that I started guys on 3 or 4 years ago, hey, are we looking at that this year? They start remembering, and we tend to do them year in, year out. But it doesn't always work out that way. A lot of these spreads are pretty wide carry in the grains already. And wheat's always a very tough one. That's the inverses and the carry and wheat spreads. That if you're a beginner, don't start there. I mean, if you're a weathered veteran, don't start there. Like wheat is an unusual commodity, but there is a lot of opportunity there. I like a lot of the inner wheat spreads. Kansas versus Minneapolis, Minneapolis versus Chicago, Chicago versus Kansas. There's so many different combinations of the inner market wheat spreads. And then you look at some of the carries. Minneapolis is probably my favorite market, most predictable in my opinion, and that's usually where I am for bull and bear spreads.
Well, that makes sense. I know you talk deferred. I know you've done a lot of December corn.
Yeah, I like that one. Yep.
So.
Yep, and I like to think of it as kind of trading with like almost an anchor. It's almost a half-size contract. Like if corn moves up 12 in one day, you wouldn't expect that spread probably to move more than 6 cents. Generally, it's probably moving 30% at the most of the underlying commodity. So if beans are up, 25 cents, a bull spread gaining 6 cents would be a pretty big day. But you never know. In the heat of the summer, though, the bull spreads can explode. I always talk about bear spreads, but the bull spreads can absolutely explode in the summer. There's been many summers where November beans have been 30, 40, 50 cents over March, May, July, and it gets inverted. And then, of course, by harvest, all the inversions go away. I've definitely been on the wrong side of those at the wrong time of year. And some of my biggest losses, I think, have come in August in beans. So be very wary and know what, you want to know what you're doing when you're doing that. But very important stuff. Like guys that don't look at seasonals and spreads, I don't even know how they trade that blind. It isn't the answer, like you said, that gives you this black and white answer. And that's another problem people have in commodities. They always want this black and white answer. It's just usually a lot of pieces of the puzzle, and you try to get as many clues as you can and then kind of go that direction. So there's never really any black and white, including spreads. But in the summer, they're very volatile, and I do like them. They tend to provide a lot of opportunities. You got to be on the phone, and you got to be quick usually, but they're there, and they usually show up every year.
I will say there are times that spreads are not as safe as the regular contract.
They can be more dangerous than an outright contract. Yep.
Yeah, I mean, especially I think of like the Ukraine war. If he would have been bear spreading any of the grains when that happened,
you could go out of business real quick. Yeah.
Oh yeah. Yeah.
In 08, before you started into 09, there were $6 differences between Minneapolis contracts of the same year. There was guys that are generational traders down on the floor in Chicago wheat pits that lost everything in a few days on inversions. It was unbelievable in 08, 09. And once you witness what they're capable of, especially in wheat, it gives you a very healthy respect for spreads. And like you touched on, it actually can be more dangerous than an outright position. You can literally get two contracts going two different directions. And that happens often. I would say it's everyday occurrence, but I mean, I've definitely been in spreads where I would have been better off in just being on one side. But when you hear guys say, I don't know what one contract's going to do, much less two contracts, you need to move to a more knowledgeable guy. Spreads are super important in commodities, and it really ties in very close to basis. So they're not the same thing at all, but they're very closely related. Super important for marketing. I can't emphasize enough that you need to learn about it, and it will really help you with your marketing decisions, even if you don't have a commodity account open and in commodities, just your general marketing is going to help you.
Just a basic understanding of spreads. I don't know how people trade without that, because it informs your trading, or the seasonals. But
yeah, cattle. I had some cattle questions this last week, and I had cattle guys in the office, and we looked at the seasonals, and there's an extremely strong cattle seasonal that exists right now, and that shouldn't be ignored. And, they were kind of surprised to see that, but I think they're very grateful. Hey, they asked the question and now they know. But, you can kind of see the look in this one guy's face like, I should probably ask about this stuff more often. There was a very important one in diesel here not too long ago. So if you thought, if you're looking for advice on filling up your diesel tanks on the farm or anywhere else, there was an important one that did exactly what it normally would do. And I just don't, for me, when I look at that stuff every day, again, it's another piece of the puzzle. I just don't understand how people can even trade without at least knowing where these things, because commodities tend to be extremely seasonal. And, did not even have that framework of what it normally does at this time of year before you make a decision. I find astonishing.
Yeah. And obviously, seasonals are averages. There's counter-seasonal things that happen. Outside forces will change them. But to your point, it's a piece of the puzzle.
Yeah, there's a reason why the averages tend to trend. You got your 5, 10, and 15. There's a reason why they tend to trend together. But then you'll have your drought. That will change everything and throw the averages off a little bit. And then, again, it's just always evolving. But more often than not, I would say it's going to help you a lot more than it's going to hurt you to know what it normally does within these time frames, whether it's 10 days, whether it's 5 days, whether it's 2 months. It's very easy to check when you know how. Do not use cumulative seasonal charts. That is all the contracts combined together for an average. That does not help a person, because you'll have, like I mentioned earlier, July, November beans often are two completely different prices. When you start blending contracts, which you're going to find for free online, they'll be called cumulative seasonal charts. They're not the same as your contract seasonal charts, which are not free. That's something that you have to pay for. It's not very expensive, but that is not free information out there. So avoid cumulative, because I've had a few guys show me that, and it's just not this. The reason why I say avoid it is because it's not a December corn seasonal is not the same as a cumulative corn seasonal. They're not the same thing, and you're going to have the wrong dates.
Yeah, those typically are one cumulative, but they'll also usually take just the front month seasonal and just keep rolling that front month number, which changes significantly with spreads.
Yeah, however they calculate it, it's not the same as looking at a November bean seasonal and a July seasonal. They're totally different seasonals, and they are not the same thing. Yeah. So if it wasn't confusing enough, you get on the internet and you want to learn more, you're going to find the wrong information. But that's kind of the way commodities has always been. It's a good boys club. It's not like stocks where you can get online and educate yourself. And there's many tools that are very helpful and free online. There's just so few resources for commodities and futures online that are good. And now, of course, everybody that puts out content is going to say that's not true at all. But I have yet to bookmark very much good stuff that's free. And I've been looking for years. So if you have great stuff, please tell me that's free. I'll bookmark it all. I'll use it every day. I just don't believe much exists. I think there's some great resources on there. They're all little fees on some stuff. If you're interested in those websites, you just call me and I'll tell you what they are. And then what I really like is I have some bookmark sites for all the USDA information. Like I'll have a soybean page, corn page, wheat page. It has everything you could possibly want in one click away. You want to know where we are against the 5-year average for exports? Click that. Like, you can get very highly organized, cover a lot of ground, and spend 10 minutes a day on marketing on your farm or on your ranch and do a lot better as far as information goes if you know how to organize it. I kind of wanted to start a consulting business side on that, but I didn't know how to sell it. Like, I can get you set up with these bookmarks. I can get you set up where this information is coming to you. I tend to like the information that's numbers and statistics more than opinion, but I don't know how you market that. I don't know how you convey that message to people, because I believe a lot of people think they're looking at good information, but I wouldn't know how to even sell it. But there's, believe it or not, there's a number of resources, and there's a number of very cheap subscription resources that's just statistics. That is very helpful. So if you're interested in that, just give me a call and I'll be more than happy to help you. Because I feel there's a true need in the business for this, where there's not a lot of good information, a lot of bad information. And the guys that have good information, why would you hand it out to any Joe Schmo? So then the guys that want to learn the markets have a hard time tracking down information that's really helpful to them. I noticed, and I think you've seen on Twitter, there's a few guys that have some educational stuff out there. Of course, I haven't subscribed to it. It looks promising, on some of the option stuff. If you can get educated and they're charging a fee and they're good teachers, that's great stuff too. I of course, I'm not familiar with all of it, but, all those are subscription based when you say that you saw.
Yeah, I think, to your point, if you have good stuff, either use it to make money for yourself, right? Yep. Or you're going to charge to teach people what you're doing. Otherwise, you're competing against yourself to hand it out for free. Right?
Yeah, there's no incentive if you have good stuff to go looking for people, because you would be doing good for your clients and you'd be busy with that. And you would also, you wouldn't feel the need to attract a whole bunch more people. So it's kind of it's always been kind of a good boy, you got to be in the loop to have the news. It's been that way in commodities forever. You know what I mean? The outsiders just aren't welcome. It's hard at school, hard knocks to learn. And that learning curve is really what knocks a lot of people out of commodities and hedging, is that it costs so much, and the mistakes are so painful that oftentimes guys try one or two things and then it's done. And also sometimes car alarms go off and guys on the other side of the mic have to hit their button.
I apologize for the background noise today. They have our one of our main roads totally torn up. In fact, it looks like
maybe something hit it. Maybe one of those bobcats just hit your car.
That's what I'm curious on. I might have to go check that out. But lots of trucks driving by. It looks like that they dig like a 7-8 foot hole, pull all the pipe out, and then fill it right back in. I don't even know what they're doing out here.
Who knows what they're doing? All I know is our neighbors here on the side. We're on a side street that's perpendicular to the street they're fixing here, and one door down from me on the perpendicular street, they got a bill for what, $2,200? Because you're part of that office too.
Yeah.
What do they call it? City improvements or something. So they got a $2,200 bill for fixing that road. I kind of thought that's where some of the taxes went to, but for a road, but it didn't make it to my mailbox, and I don't think I was going to pay it. Like, I didn't know that they could fix a road near you and then stick you with a big bill for it. I didn't even know that existed.
I actually have five properties that touch that street. So
did they charge you?
Oh yeah. My bill was not. I would have loved to have had a $2,200.
What was what did they call it again on that? Because you showed me one of the letters. What was it? A city improve? What was it?
Yeah, I don't remember.
They had a fancy name for it, so that means you have to pay for it. No, I didn't know that existed. You learn something every day. So if they fix the street near your office building, look out. They might stick you with a bill. Yeah, but they've been, I don't know, they've been moving dirt around like crazy. I've seen some pipes knocking around. It seems like, I don't know what they're doing.
I mean, of all the streets in the world that needed repair, that one was high on the list. So I personally, I'm glad they're doing it.
It was overdue. It wasn't a super traveled street, but when you did travel it, I meant it was off roading.
Yeah, I do some work with the glass company, and people were told if they drove down it with the glass truck, they were immediately fired. So they might be able to use that street after.
Yeah, it will be nice when it's done. And we're in an up and coming area too. We got a boutique hotel of some sort coming. I don't even know what it is, but they're going to make a flour mill into a hotel, right?
Yep.
It is on the river, and it could be nice, but I'm not sure what the plan is. They're doing it anyway.
Got the brewery down the street,
down the street. It's just kind of this, I wouldn't call it hoity-toity, but it's starting to feel that way.
Well, we're getting there, John. You're going to have to start wearing shoes and dress pants instead of sweatpants.
I don't know if I'm going to. I like sandals, and I guess if I have to start wearing pants, that's fine.
Hopefully you're usually wearing pants.
Well, I mean, when I say no pants, I mean shorts.
Sure, gotcha.
Yeah. So
I just appreciate when you at least have the sandals on.
Yeah, I'm in a unique area around here. I wouldn't say I have ever had a lot of business in this area, and it's nothing but farms. They have an interesting I don't know what you'd call it, business plan around here, business ideas. They do things. They march to a beat of a different drummer. That's a nice way to put it. And that's their journey. So I actually don't have a tremendous amount of people in Bismarck. When I first came here, in the office, I made a trader's room and had like 3 or 4 laptops, assuming people would be coming in here. Almost like I don't want to get bothered, but hopefully they come in. In Bismarck, we'd have 3 or 4 pretty sharp guys show up every morning and have some coffee, and we'd have some laughs, and everybody tells us what they're doing trading, and it was fun. And I thought that would happen here. Not even close. I think, I think they get scared even passing here that possibly they could lose everything if they even have a conversation with me. So I really haven't met too many guys around here. Very few. But for the guys that I do have around here, real great guys, real knowledgeable, real good guys. But that's, long story. That's why I wear shorts and sandals because I can.
Why not?
Why wouldn't you?
Exactly. Especially now that we finally have summer here.
Yeah, exactly. So the Traders Room, I hope one day is operational. It's ready to roll and ready for some guys that want to drink coffee and know everything and talk about the markets. But right now it's pretty quiet.
If you want to come trade in the Traders Room or just discuss spreads with John, call him at
218-731-1578.
Thanks, John.
No problem. But it's like so many people just don't do like the easiest of the easy things. And it just really lingers for them. These are big problems.